some people. Welcome to another episode of the closing bell for week ending March 15, 2013. We also like to welcome new members of the that has upgraded from the light membership to our premium membership. Welcome to the family. I won't spend too much now. Just want to go through what we have, the notes that what we have yesterday. No, sorry, last Friday. Now, last Friday we talked about that the temporarily hit a resistance at 1654. The market at 1654. This is a daily, weekly chart. 1654 here, and I did mention on March 8th, which is last week, we expect a sideways market. This is on a Friday, Thursday, and we were quite spot on. We at this junction, I saw this as a likely no demand bar, but as you know, on Monday market go higher, and Tuesday it did break higher, only to reverse to the short side. Now remember, last week we did say this was not really evidently of an uptrust, but remember the FBM 70 last week also hit the high side. So that's why we are saying that they're likely to move sideways with the bias to the downside. Now the market has since came down, and it did what it did. I mean, like it or not, how we see this in volume spread analysis. Generally, when you see market like this, okay, let me just switch the color first. I don't like this color. Choose my pink color. When you see this, right, market has to do what we call an automatic rally. When it does that, it will come back and retest. This is a key point here. I'm not too sure you can either go upside at downside at this, because we have the 200-day moving average. Again, a lot this will depend on the general election coming in here. So we are at the so-called junction and key point, and now we are seeing market seeing some sort of a sell-off. Now last Friday, 8th of March, the KLCI was doing at 1652. Today it's doing 1634. Okay, so that tells you someone is starting to take some money off the table. Okay, now going back to this again, this is already, we have 4 days of successive down bar. So come Monday, we were likely to test this 1632 level. Now don't forget, I'm going to touch on is the wicks, which is the measurements of put and call listed in the US Dow Jones, which tells us how fearful or how greedy is the market. At this stage, it is showing a very low figure, which is around 13, and that's what I don't like about it. We will get to that one, and that's prompting maybe a likely sell-off next week for US Dow Jones, and this will in turn try to break our so-called beloved KLCI. Now if you go back a few more, I will touch on it a little bit back of history. The KLCI so far has broken down. We haven't broken down yet 4 times. Okay, the major one. The last time was in May 20, first time 2010, and it didn't come back almost until 1, 2, 3, 4, 5, almost about like 5 or 6 months in there. And the second time when it broke through was August 2011, right? August 2011, which is here. Let me just go back. The first time when it broke through was May 2010. Let me just show you. Yes, right. So since then, market has quickly stay above the 200 moving average. Now this is a key indicator that a lot of smart money and a lot of institutional look at, which is the 200 moving average. Now in here, 1, 2, 3, 4, it did break down temporarily only for 4 times, but the smart money came in and pushes it through. Now the market made a new high here, which is about 1660, just roughly for the last 1.5 month high. Immediately reversed down. That's my opinion, that the market is likely to break below the 200 moving average, 1632 here, because if the smart money doesn't want to support it, it looks like it may just break. If it does break in, it's going to be fast. So the longer it tries to stay above the 200 minutes, the more the market pushes down, which means there is a bias to the downside. Now having said that, only Malaysia market is reacting. It's all you may know, the KLCI is the worst performing indicator or so-called indices in the market so far that we've seen. So this is what's happening in here. All right, now let's move on to the foreign funds. Let me just bring up my foreign funds, okay, chart here. Now the foreign funds so far, they have been, if you look at this, this is the weekly that I normally show. You can see they've been this red line is a 5-day rolling accumulation, which means it's a 5-day of net buying by the foreign fund. So you could see it is really going up, but towards end of March it's really dipping in down. Having said that, the foreign fund on a daily basis are still net buying. Now, I also mentioned today in our Friday chart clinic at 11 o'clock, Bill also mentioned that the foreign fund has been heavily buying. If you could see that, let me just show you this. Since February, all the green, with the exception of 20th of February, every day has been a buy day. If you since pushing up as far back as January, okay. But another better way to see this, you can see, since January and December, you could see the accumulation of foreign funds. It is going higher and higher. So the emerging markets, Malaysia being, it's really relatively very bullish. However, sentimentally, market is breaking it down. So foreign funds, smart money are accumulating high quality stocks, which tells you there is no market breadth, meaning you will get few shares that do very well. So you have to do very well on picking those shares, and the rest of the market could be your second liner, or it could be a penny shares, will not do as well. Right, that's my key message in here. Foreign funds, they will support some of the high quality good blue chip stock, but the others is